All right, let's now turn to our Tuesday morning Money Watch. As we told you earlier in the show, the federal government shutdown is now into its 28th day. The Federal Reserve is set to meet tomorrow and could make its next interest rate decision. This despite a near total blackout of federal economic data due to the shutdown. Joining us this morning to talk about how that decision could impact you is Dewey Steffen, CEO of Great Lakes Wealth. Thanks so much for joining us this morning, Dewey. And let's start off, how would a rate cut impact all of us here?
Well, there's a lot to unpack there, but immediately interest rates coming down will help anybody who needs to borrow money. So whether that's your mortgage, a new car loan, or even redoing your credit card debt, there's a lot that you can do when interest rates go down.
Yeah. So what would be the goal of the Feds right now?
Well, the Fed's goal is to have full employment and low inflation, and they believe that both are creeping up. It was announced this morning that Amazon is laying off 14,000 employees. So the Federal Reserve is trying to help in all the ways that they can.
All right. What are you anticipating a decision could be during this meeting?
Well, the meeting starts today and it'll end tomorrow. And at 2 p.m., there's a 98% probability, so that's pretty high, that they will cut rates 0.25% and take the Fed funds rate down to 3.75 to 4%. And then again, they will talk in December, and there's also over a 90% estimate that they will cut again in December. So we see some future Fed cuts.
Okay. How is this going to impact the everyday consumer? I mean, we hear about these interest rate cuts. Where are those really applied, and how is it going to affect the everyday person?
Well, like I said, anybody who's getting a mortgage, those will come down. Anybody who's got credit card debt, those rates should come down. Auto loans as well. Who it hurts are the retirees that are on kind of fixed income, and they earn interest on their money in a bank and every place else, and those rates may come down as well.
So could this have any potential ripple effects down the line or even in the short term when you make these sudden changes?
Yes, and it's supposed to be positive. So on Wall Street, we say don't fight the Fed. And that means that the Fed is accommodative and easing, that means they're trying to make things better for all of us. So you need to get on board that train.
All right, so we've seen a lot of action when it comes to these interest rates through the last administration and this administration as well. So how could this impact the market potentially?
Well, the market might have been front-running this. So the S&P is up 17% year to date, and the Dow is approaching 50,000. Ring that bell, ding, ding, ding. And so either way, whether we're at a market top or not, the Federal Reserve's cuts should help spur additional economic growth.
All right, Dewey. Well, thank you so much. That really helps us put a lot of those things into perspective as we keep an eye on what a potential decision may be when these groups come together. So thank you so much for joining us.
My pleasure.
Appreciate
Thanks for
it,
having
Dewey.
me.